Hey you guys, tomorrow there is going to be a major catalyst in play because GME seems like they are gearing up for a meeting. We want to look right here to my left. We have X post from Wall Street Bets, possible GameStop catalyst incoming tomorrow. All right, they present a possible new catalyst, the iron to the nitrogen and the hydrogen, on the 30th of March 2021. And with Third Bridge, it has been named GameStop, e-commerce transformation and structural business overview. Maybe the reason why leadership has kept quiet about their future in the earnings call last week. We covered that earnings call live, and there was a big expectation and not a ton of delivery on top. So there may have been holding out on announcements so that Third Bridge could get the juicy news. But then again, these are speculations coming from, not a financial advisor. So, and neither am I. So October was on the Microsoft deal and the upcoming console cycle. What do we have coming tomorrow? We'll take a look at the agenda on the image below. Right, we have exclusively linked to GameStop as the first image for the October interview. They say this because you see Walmart, Amazon, Target, and Best Buy listed as relevant tickers for this interview. Right, too long didn't read. Possible catalyst, GameStop has an interview tomorrow discussing their future with the same firm they had an interview with that they also announced the Microsoft deal in October 2020. Tomorrow's announcement also includes all of these other ones, Amazon, Walmart, BBY, as linked tickers to tomorrow's announcement. Now, what could they possibly be announcing? Well, first of all, thank you, user STEDENT. But what we are likely going to see is what a user Anon GME holder has been talking about here. If you guys like the DD that these guys have been putting together, I appreciate them being able to compile it for us. Then smash that like button so that their message gets out to more Moon Platoon apes, and subscribe and hit that bell button so that you can help the channel get up to 74,000. So, introduction. Listen up, the fellow ape brothers and sisters. They have lurked in this beautiful community since the 45s. They like to say that they are not a financial advisor, and neither am I. The game that we've gotten ourselves into. This is, once again, talking about what GameStop could be announcing tomorrow and why the finishing blow of the end of the shorts can be coming from within GameStop. The game that we've entered into is one that is not only played by our beloved GME, but with countless other stocks in the market. Almost always, this game is played by the shorts and the shorts alone, banding together in hordes and driving companies into the dirt, all the while reaping insane profits on their plays. The shorts are usually successful in these plays due to their gargantuan presence and influence throughout the market. They are able to psychologically beat those that oppose them through controlling the market by methods such as short attacks, ETF shorting, naked shorting, and payment for order flow, as well as controlling the narrative by paying the media, journalists, growth hackers, and social media experts. They know the market is ultimately a giant psychological game. They know that fear, uncertainty, and doubt will kick in and cause further selling pressure from the way they attack the price at vulnerable times. Ultimately, they want to cover their position once it is profitable for them, meaning the price is lower than the original value they bet against. There are countless amounts of companies with different short interests. This value can range from 0% to 20% or higher. We covered even crazier amounts of SI in a previous DD that we covered over the weekend. From an industry standard basis, 20% is considered a high short interest. For example, in July 13th, 2020, Tesla experienced a soar from approximately 1,500 USD from approximately 200. This happened with a short interest of around 25%. So let's skip right here to quote the wonderful Mark Cuban. Their goal is to never cover their short, because then they would get the company going out of their business or getting delisted. And we've covered this from the very beginning. How does a company make massive amounts of gains from shorts? That's how. Because you can essentially short them into the ground here. The shorts can only win against a GME if it goes to zero, and the scenario cannot happen. The fundamentals of GME guarantee that with a 99% certainty. Remember, we've talked about 99% certainties with other DDs before. Always take your own research into account when making these probability plays. This also means that the shorts have already lost the game. Now imagine a chess match with the lone king on the board against an entire army of bishop, pawns, rooks, and knights and apes. That's what we are looking at right now. The end game. Okay, let's just read this bold part here. What you are currently seeing on the tickers every day on market open is not the real price of GME. The real price of GME is buried under so much shorting pressure, short attacks, ETF shorting, naked shorting, that lifting it would blow up the price to historical, unprecedented, galactic levels, causing shockwaves across the universe as we know it. Now, hyperbole aside, this is likely going to be the technical data behind everything here. This also means that the price is artificial and that the shorts will try to gradually show the holders of GME more and more higher prices in their own range that they can afford without being absolutely margin called to death. Think about this as a negotiation between us and the shorts. The shorts keep coming to offer different prices for our priceless diamonds. Shorts in January 28th. Hi guys, we're offering you a maximum of $460 for a share of your GME. And look, the price is going down more. More people are accepting our offer. Ha, you better sell yours too. Shorts in February. Haha, I told you to take the offer on $460. Now look at where we are. We don't negotiate with longs. Last chance to take it on $150 a share. This company's valued at $15 a share. $150 is a steal later on. I told you this is a dying company. $45 a share is better. Ha ha ha. You should have listened. And now, okay, this is awkward. So maybe it didn't work out last time. Perhaps I come back at the table in January, but because you didn't listen to my price, the highest I'm willing to go is $360 a share. You better take it now. I'm not coming back. I swear. This is back with the second gamma squeeze in March. So they control the price. No. Indeed, the development of the business must cover the share price development. The more the share price rises, the better the business must go or the outlook must be. When the price decouples from the fundamental basis, the short seller attacks. So much for the presumed logic. However, a problem for the short sellers arises when the price goes up and up and up, and they have to buy stocks to cover their obligations, which creates an enormous demand on the market. GME has three incredible fronts as investment. Here are the three. Incredible company fundamentals. GME is in the process of transforming into a digital powerhouse for video games, and it could not be in a better leadership position with God entrepreneur Ryan Cohen spearheading its future. The industry and focus of the company is in a very flexible position where it has immense opportunities to expand into and conquer varying markets. GME is literally a future giant in the making with its leadership and brand value. GME is shorted more than 100% of its float confirmed. This means that attached to a company that can fundamentally be more than $1,500 a share by, for example, 2025, there is downward pressure on the stock that exceeds its available shares. This is an unprecedented scenario because of the rise of the Phoenix happened after the shorts had gathered in to feast. This scenario cannot cease to exist due to the natural new shift and direction of GME and the inability of the shorts to close their positions unless they want to literally die as companies. A new wave of unparalleled customer support and loyalty is growing in numbers every day. Now, who better to lead these already loyal customers whilst bringing in waves of new and satisfied customers, all the while leading the company to its promised land of glory, the master of customer excellence, Ryan Cohen. So these are all ideas coming from within GameStop that they could cover tomorrow in that Catalyst meeting. So too long didn't read. Let's actually go down here. The end is in sight. GME is a company with incredible fundamentals due to its transformation, what shorts hate. So the catalyst will come, and it sure is going to come from GameStop's side. New CEO, CFO, shareholder vote, etc. It'll be beautiful to watch as we soar past the galaxies in this rocket. Organic upward pressure from a transformed company is the worst enemy of shorts that never want to cover. So be patient. Mother of all short squeezes is coming. Remember, this is not financial advice coming from someone who is also not a financial advisor. Thank you to these two people that have wrote these DDs. A user, a non-GME, a non-GME holder, but I suppose that means he is anonymous, not that he doesn't own GME, and then a user, STEDENT. If you guys wanted to support the show and be part of this group, the Moon Platoon, the Meatball the Space Legend tier, and the Gorillionaire tier, we do go live bell to bell every single day, and getting 2 bells is just as good as getting 2 stocks, 2 free stocks, using the Webull link down below. It's the one that says quit Robinhood, and I think you guys are doing yourself a disservice if you're not using the technical analysis charting app that I use up here for now. But not for forever. I will see all of you in space.